please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back to Bazaar Morning Call. Well, looks like the SGX Nifty is indicating that the start could be in the red, though it's recovered. At one point, it was down about 60 points. 10,785 is what we have on the SGX Nifty at this point in time. Our technical experts join us, Mitessh Thakkar and Prakash Gaba with us for now. Sudarshan Sukhani will also join us in a bit. Good morning, Mitessh. Your thoughts first on the index. Last week you were talking about your long trade being stopped out. Are you taking shorts, or you think it's still a market in which you would rather want to take long positions on decline?
Good morning, Anuj. I think last week, on Thursday when we had a gap down, so I think we had our trailing stop loss being hit on the long positions of Nifty. My sense is that today we'll open around this 10,780, 775 mark, which in the last few days has acted as some kind of a short-term support. In case we start breaking below that, then I think there will be a shorting opportunity. The bank Nifty between the two looks like slightly on the underperforming side. I think below 26,500 I would maintain a negative bias and look for a test of 26,150, 200. Below that another 200 points could happen.
Okay, all right. Prakash Gaba is also here with us. Prakash, hi, good morning. Give and take everything, all the news flow that we had last week, global markets were also flat by the end of it. Our markets didn't move much. You get a sense that this could be the order of this week as well?
I feel that, good morning to you, Sonia. Up move that we saw on Nifty in the last 1 hour was not very comforting, because when you look at the bank Nifty, it was certainly weak. Now, can Nifty go up without banks? I don't think so. Bank needs to support. So far, that is not supporting. Just because Pharma is up, is Nifty up. I would say that 10,820 is a very crucial support I would say, a point to work with. A close about this would say everything is okay. Now, if it does not close about it today, then I would say that maybe the turn is turning. Maybe it's weakening. Maybe we will see some kind of a bias on the downside. To my mind, Bank Nifty certainly is looking weak. Even if you do get rallies until 25,500 zones, 26,500 zones, those would be shorting opportunities. To me, the bias is down.
Okay, the bias is down. Let's bring in Sudarshan Sukhani into the conversation as well. Good morning, Sudarshan. This market has been trapping both the bulls and the bears last week. Unless you were very lucky or had a very smart trade going on. Which way are you betting this morning?
Yeah, good morning. Well, the bets are off this morning. The markets should not be going down because Friday we saw a very sharp spring. We had a 100-point rally almost from the lows, and there was buying. That was evident. And world markets are down today, and there is a sense of pessimism going on. But the Nifty is not pessimistic, so I would still be a buyer on any opening dip. We are expected to see lower levels in the morning. Once the market stabilize, and I think they will, that's a buying opportunity. So the Nifty continues to be a buy on dips instrument. The Nifty bank is an avoid, but I assume there will be many other Nifty stocks that can take the Nifty at least from lower levels. So that's a buy on dip strategy that I would have today.
Okay, by the way, for those of you missing Ashwani, he's just on a 1-week leave, enjoying his vacation in the hills, and he'll be back next week. Sudarshan, good morning. Your thoughts on how to approach IT and Pharma now after the big rally that we have seen?
Okay, Anuj, the Pharma rally hasn't even started. What's happening now is the first of the rallies that we are seeing after that big bear market. So Pharma is a buying opportunity irrespective of what the Nifty does. Every small dip in Pharma is a buy. Don't think about anything else. And it's an investing idea. You put it in your portfolio, and for intraday traders, for short-term swing traders, buy the dips in Pharma. I think that the tide is now turning. The same is not true of IT. IT can probably consolidate for some more time, but eventually the uptrend in IT is also intact.
Okay, so the uptrend in IT and Pharma are intact. There could be more money to be made there, both by investors and traders. So let's talk about individual stocks then. Mitessh, what tops your list today?
I have a mix of buy and sell calls. Apollo Hospitals was a buy on Friday as well. Remains a buy now. I think a mild decline in the opening could be a good entry point. Try to buy it between 1,025, 1,028 zone and keep a stop at 1,005. Look for targets of 1,062. A sell in Tata Power, which is broken below a swing support level, so keep a stop at 77.25. Look for declines to about 73. Another sell on Apollo Tyres, where the intraday charts are negative. Keep a stop at 273.5. Look for declines to about levels of 256. And Bank of India is my final sell call. Sell with a stop at 1000.5 for targets of 93. And I have a conditional buy on Balrampur Chini. The indicator setup is now turning positive. There's a pivot at 75. The stock closed at around 74. So if it starts getting past 75 today, that could be a good buy with a stop at 73 for targets of 81.
Okay. Prakash, your stock picks, I'm seeing Indian Oil. Now, Indian Oil, are you trading it on the way down or up? Because there's on the way down.
Yeah, absolutely.
Okay, despite the fall in crude prices. That's interesting.
Yeah.
Okay.
I'll go with Apollo Hospital first. Looks good to me. Looks like a bottoming out process here. Maybe we can see a target on the upside of 1060. Stop below 1020. Apollo Hospital should be fine. I also like Power Grid. Power Grid seeing again some kind of a consolidation up move started. Can see a climb to around 205 zones, stop below 198. Now Indian Oil was looking weak to me. I would assume that it's still down despite what the oil prices does. Target on the downside could be in the vicinity of 163, stop above 170 or maybe 169 should be just fine on that. And Karnataka Bank certainly is looking weak. Can see a slide to levels closer to 116, stop above 120.
Okay, so mix of buys and sells. Sudarshan, what's on your list?
Well, it's a mix of buys and sells. FMCG is a buying opportunity, that sector with whatever the Nifty is doing. So Asian Paints is a buy. The stock has gone through a minor correction. That is behind it. It's now heading towards lifetime new highs again. Hind Liver is also a buying opportunity. Don't think it is high priced. In 2 years' time, we'll be wondering why we did not buy it. It's an investing idea and it's a day trade also. The dip that we are getting in the morning should be used to go long in it. The third is Hero MotoCorp, again a buy. Hero MotoCorp has built a base, is broken out, and these dips are meant to go long in good quality stocks. Two short selling ideas quickly. One is NBCC, the chart is now breaking down, support levels are going under. And the second is India Cement, again part of the cement pack which is not recovering at all. But I would still be a buy on dip.
Okay, all right, gentlemen, thank you very much for your calls on all those stocks as well as the market. We will come back to you shortly.
Buy on dip.
Okay, all right, gentlemen, thank you very much for your calls on all those stocks as well as the market. We will come back to you shortly. Right now, it's time to focus on an important meeting that took place yesterday in New Delhi. It was the meeting of the Governing Council of the Niti Aayog, and certain important decisions were taken, one of them being to set up a new panel that will look at agriculture and Narega issues. It's going to be a 7-member panel, 7 different chief ministers. That and a whole host of other decisions. Here's Rituparna Bhoyan wrapping up that action.
A whole host of issues were discussed in the Governing Council meeting of the Niti Aayog. Let me concentrate on some major ones. One was regarding linking Narega-related activity with agriculture activity. Can pre- and post-harvest activities, can Narega-related schemes be incorporated into that? So there was a discussion on that, and a 7-member Chief Ministers panel has been formed, which will be headed by the Madhya Pradesh Chief Minister. Secondly, the issue regarding the 15th Finance Commission, that's a sensitive issue for many southern states as well as some opposition ruled states. That was also discussed. The Prime Minister said that this government wants the benefits of the 15th Finance Commission recommendations to be available for one and all. And hence sought recommendations from state on how to achieve that. Also, there was a suggestion regarding having one single election, which includes central, general elections, state elections, and even local body elections. Combining all of them, can there be one single voters list for all of them? States have been asked to give recommendations on that. In addition to this, the Prime Minister also spoke about 100% coverage of 7 top development schemes in villages. According to him, 17,000 villages in India now have 100% coverage of these 7 schemes. Can it be now scaled up to 45,000 additional villages by August 15? That was one idea that came up. Also, there was discussion on Ayushman Bharat, where states like West Bengal and Punjab have told the council that they are interested in participating in the Ayushman Bharat scheme. Last but not the least, the Prime Minister also asked the states to focus on export-related activity. Can the state policies be tuned to ensure that there is trust from the states to improve exports, especially from MSMEs? With that, it's back to you.
All right, Ritu, thanks a lot for that. Well, a lot of key issues discussed, top of mind being the process to double farmers' income and the solutions that this would entail. But at this very meeting of the Niti Aayog over the weekend, the Prime Minister has asked all state governments to use LED lights in offices, government buildings and streets. Of course, this is overall a big positive, but it's also a big boost for many listed companies. Bajaj Electricals is the company on our radar. Not just this, the company has also acquired Nirlep Appliances for almost 42 odd crores. So let's find out more. Shekhar Bajaj, the chairman of the company, is with us. Mr. Bajaj, good morning. We will, of course, get to the acquisition in a bit. But before that, your own comments on the Prime Minister asking all state governments to use LED lights in offices, government buildings, etc. Does this throw up a big revenue potential for companies like yours?
Basically, most of the government requirement is done through ESL, which is the government agency who floats tenders, and we have to quote, and then the margins are very competitive. But overall, because of the very, very important electricity savings, so by state and central government, if they use more LED, finally power will be available. And when we are looking at Make in India, it's important that we should have more power available, otherwise you cannot increase your production. So it's a very good move by the Prime Minister to make that compulsory. From an industry point of view, if I look at it personally, I mean, from the industry point of view, I don't think it's going to be a money-making situation for us, because the tenders, the prices go very low. We are basically more dependent on the trade side. So trade side, anyway, is something which we continue to grow, and we are doing quite well.
That's an important point, Mr. Bajaj. Thanks for clarifying that. One can understand it's a government tender, so obviously they will look at the most competitive rates. So let me now just come to the acquisition that you've done, about 43 crores for Nirlep. What was the thought process, sir? The revenues of this company, and by when? I mean, does it become EPS accretive straight away?
Basically, Nirlep is a company which has been there for almost 50 years, and they are a very, very good brand and very, very good promoters in terms of the Bhogle family of Aurangabad, where Bajaj family knows them also very well. So they were, and therefore, but they found that in terms of growth, the way things are happening all over the country, they are basically strong in western regions. They are also in Maharashtra and Gujarat. And what we thought that with our distribution network being strong, it becomes something where we can use our network. We are still wanting them to continue to be holding shares in the company, so it becomes, over a period, we'll become 100% subsidiary of Bajaj Electricals, but initially we'll take 80%. They will continue to hold 20%. They'll be involved with us in the management so that there's a continuity. And this is, by chance, in terms of Bajaj Electricals, this is the first acquisition that has taken place in the company. Oh, we've had a lot of joint ventures, we've had technology transfers, but we've never acquired a running company. So this is the first acquisition that has taken place.
Yeah, that's true. So, Mr. Bajaj,
last year was about 60 crore. Okay. Is the turnover last year. They have got IKEA, and then now Future Group, which has stopped, is again buying from them. So we are expecting the turnover in the current year should cross 80 crore. Okay. And it's 42.5 crores, so we'll be paying 80% of that immediately within the next 60 days. And then the remaining will be, whenever we decide, we have a right to acquire the 20% on a particular
so what? Formula. So 80 crores will be the
No, not 80 crores, 80% of 42.5 crores.
Okay. Yeah. So, sir, turnover right now is 60 crores. On what kind of margins and EBITDA levels, profitability levels for this entity? Does it match yours, better than yours?
It's not profitable because they're set up, they've got a fantastic factory, they've got a whole setup for distribution, but 60 crore turnover does not give you a bottom line, and that is one of the reasons why they decided to take us as a partner, so that at the end of the day, we are saying 80 crores over a period. The total market for what we call it NICA, non-electrical consumer appliances. So these are NICA products which has a market of, for our products will be about 1,200 crore. And therefore we can clearly grow and substantially use our distribution network. And therefore it becomes, in the next couple of years, it should start making profits.
All right, Mr. Bajaj, we'll leave it at that. Thanks for joining us. We'll take a short break, but up next, top F&O trades lined up with Vinod Sharma of HDFC Securities. Also, Prakash Diwan will join in with some long-term stock bets.
Welcome back. The red across Asian screens continues. The markets that are trading, so the SGX Nifty is recovered a bit, but still down about 35 points for now. Let's get some more trading ideas going. We have VK Sharma joining in this morning as well. Vinod, good morning. Thanks for being with us. What's the bent of mind and the trades that you're going with today?
Yeah, good morning, Surbhi. I want to reiterate what we had said on last visit Monday. The view was that the markets will climb these wall of worries, and they have definitely done well despite a Fed hike and taken the ECB, let's say, ending of the bond buying program, tapering also in its stride. We are gung-ho on the markets. We believe that the SGX Nifty has forgotten how to analyze the Nifty, and therefore we are not going to buy the dips. So should the market dip as much as 35 points, what it is showing now, I'll be a willing buyer of the 1100 call, not essentially for saying that we'll close above 1100 in this series, but in case the markets were to rise another 50 points from the opening levels, the target of 20 would be reached. So I'm buying the 1100 call at around 15 rupees. Which quoted at 20 rupees. Should the 35 point lower opening, we'll see that rate coming in, and one can easily sell at a target of around 35 from the current levels. So that's my strategy on the Nifty.
Vinod, good morning. Let's discuss individual stocks as well, and you have a lot of index stocks and non-index stocks as well.
Yeah, good morning, Anuj. Asian Paints is my topic. The stock hadn't done anything on Friday. It had closed with no gains, so I'm buying it largely largely on the fact that the crude prices have tumbled. I'm buying the 1300 call at 12, stop loss 6, target of around 24. Good possible returns. Indigo is another stock which is a direct beneficiary of the fall in crude prices, which tumbled 3% on Friday, and even in this electronic trade in Asia, they are still further down by 2%. So I'm buying the 1250 call at around 17, stop loss at 10, and target of around 30 in Indigo.
All right. You also have a couple of more calls, Tech Mahindra, Hindalco, etc. Take us through that.
Yeah. Tech Mahindra should benefit out of the 20 odd paise. Weaker the rupee could open now. We suppose the rupee would open lower. Tech Mahindra is a good buy at 710 call at around 16, stop loss at 10, target around 27. And Hindalco, obviously in line with the fact that the metal prices are currently trading lower in China. I am buying the 235 put in Hindalco at 4.8, stop loss at 3, and a target of around 8.
Okay, all right. Thanks a lot for that, for giving us all of those ideas. Let's move on now onto our ongoing series, SEBI's Watch List, the segment where we focus on stocks that are currently in the additional surveillance measures list. Today we have one stock that has fallen, I think, about 15-20% since the start of the month, but has been a big wealth creator in the past. Mangalam Malu joins us now, and the stock on his radar today is Radico Khaitan. Mangalam, over to you.
Absolutely, Sonia. You know, Radico Khaitan, it's been a big mover. It has entered the SEBI's watch list from the start of this month. And since the start of this month, the stock has lost about 15% since its inclusion in the watch list. But from record high, the stock is down about a fifth, which is 20%. But no mean feat for the stock, up about 4 times between June 2017 to June 2018, which is just before it entered the SEBI's ASM list. So a little about the company. Well, it's India's 4th largest and 3rd most profitable alcohol manufacturer. The reason why the stock moved higher is because the company transformed itself from a bulk and a country liquor manufacturer to an IMFL seller. So the brands that are popular for the company, the likes of 8 PM Whiskey, Magic Moments Vodka, as well as Morpheus Brandy, they've recently entered the super premium single malt segment as well with their new product, Rampur. The company, remember, commands 50% of India's vodka market share via its vodka business. The financials of the company have been improving from FY15 to FY18. In the 5 years, their revenues have grown at a CAGR of close to around 6%. 1488 crores has become 1823 crores, but the bigger trigger has come in the margin improvement. 11.5% margins in FY15 have turned into close to around 14.8% in FY18. The net profit as a result of that has grown much faster at 16% compounded annual growth. So FY18 net profits were close to around that 123 crore mark. Remember, the profits have further been boosted by lower finance finance costs. So the company has been deleveraging itself from 90 crore in terms of finance costs that the company used to pay in FY15. It has come down to 68 crores, and the total debt has come down from 740 odd crores to 520 crores. So what are the triggers for the company going forward? Well, the management has laid out the guidance. They expect to be debt-free by the end of FY21. That is something we'll have to watch out for. They forecast 10% volume growth as well as 150 basis points margin rise in the next fiscal. So that is one thing I'll be watching out for. The FIIs, they've been upping stake in the company from 18% just 4 quarters ago. The FII stake in the company now stands at 23%, but there are a few concerns. High trade receivables, close to 4 months worth of days in terms of receivable. Slower than expected pickup in volumes could hurt the financial performance, as well as regulatory risk given it is in the sector that it is in. Watch out for the company's EPS. While it has moved a lot, trades at 30 times, still at a significant discount to United Spirits.
Mangalam, there are several highs with this one, isn't it? Most of those bar charts are just moving higher. Anyway, thanks very much. Very quick disclaimer, this is not a stock recommendation. This is just some data and research that we've put together looking at companies that are part of this ASM list. Definitely not a stock recommendation. You should look at the fundamentals yourself. Let's quickly move on. And welcome in our next guest. We have Prakash Diwan joining in this morning as well. Prakash, good morning. So I'll start first with the Dr. Reddy's, star of last week, last month, 20%, 23% higher. Now there's a niggling issue with Suvaxon that's just come through. If there is a dip today, is that a buying opportunity? What do you think of this pharma rally?
So the pharma rally finally seems to be real. So there's no doubt on that. But whether I would buy Dr. Reddy's, the answer is not yet. For the simple reason, it's not one of those companies that will be off the starting lines in a way that's very convincing as compared to some of the other names which are looking much more imminent, much more promising. So when you have the likes of Sun Pharma, Cipla, Cadila, Dr. Reddy's probably will have to wait for the second round of buying.
Okay, well, Prakash, hi, good morning.
Hi.
The other news story we were just discussing is the Prime Minister urging states to use LED lights across, whether it's government buildings, offices, etc. Yeah. And the top LED players, my colleague tells me, are Crompton, Havels, Bajaj Electricals, etc. Although Bajaj did tell us that margins are very low here. Yeah. But any of these companies that you like as an investment buy?
Yeah, so it's it's like a renewed kind of a vigor that's likely to probably come into this. But most of the government sales on the LED side happen through the agency, the ESL business that they've set up exclusively for this. And a lot of it is quite wasteful, actually. Okay. So, to be honest, it's not viable for them as well. They also don't really make too much money, and it's difficult for the likes. But what's going to change with LED is, once LED reaches the consumer, once you are inside the household with the simplest of light fitting, which kind of modernizes the setup, then you have a host of other things which kind of start following in. So I think the likes of Bajaj Electricals and all have benefited tremendously from that change, and then they would consumer durables on the higher end price points from Crompton, Greaves, from Havels would probably have to wait. But I think the entry level guys would really benefit more.
Okay, well, speaking of this issue, more LED lights in all the government establishments, we've actually got the management of Eveready India now joining in. We have Mr. Amritanshu Khaitan. Good morning, sir. Thanks for talking to us. We were just discussing this with one of your peers that while it's a great headline, the issue is with the margins. I mean, what is the kind of margin you will make anyway on a government contract? What proportion of your revenue is coming in purely from the LED business right now? And how do you view this government commitment of moving to entirely LED for all the central government offices?
Good morning. For us, about 20% of our revenue are coming out of the LED business. For Eveready, it's a very recent entry in the last 3-4 years where the company has scaled up in the consumer LED space. What news has come out where the Prime Minister directed state governments to use more LED lighting is more on the professional lighting space, which is more a recent entry for the company. And we personally believe that margins is something which would be on slightly the lower side here, but it adds a lot of scale because the way ESL actually promoted the consumption of LED bulbs, it created a lot of economies of scale and brought cost of manufacturing of these products lower. Now the government is looking at street lights where they are driving a massive push on conversion of streetlights at the center level. And if the nudge from the Prime Minister gets the states also to convert from the traditional streetlights to LED-based solutions as well as buildings and offices, you should see an additional 10 to 15% growth for the overall industry in the coming year or two.
Okay, so 10 to 15% growth for the overall industry. But what about for Eveready? What kind of turnover are you looking at from the professional LED lighting business over the next 2 years?
The category, Sonia, is about 6,000 crores. For us, since we are a new entrant, we are targeting with our team being set up to at least get to about 100 crore level in the next 2 years. But these numbers can dramatically go up also because each tender is large scale when it comes from EESL. But there are very small niche tenders also coming out of various municipal corporations. So like recently we just bagged a 6 crore tender from the Calcutta Municipal Corporation. We've just got approved in the Chennai Municipal Corporation. So it is those tenders are slightly better in terms of margin as compared to EESL. So on the conservative side, we should look at adding about 100 crores of revenue in the next 2 years.
All right, Mitanshu, thanks a lot for stopping by. So 100 crores of revenues over the next 2 years and a 10 to 15% industry growth is what he hopes to see in the professional LED lighting business because of what has come through. But Prakash Diwan is still with us. Prakash, talking about your favorite space, the auto ancillary space.
Yes.
A lot of stocks hitting new highs. Last week we saw names like Sundaram Fasteners, etc. hitting new highs. Any stocks that would top your list now? Any stories that you're looking at?
No, so I think, the favorites continue to be strongly placed suppliers to the OEMs and people who are mission critical in terms of the growth of the automobile parent itself. So you have a JTKT, you have a Subros, we discussed a company called Suprajit Engineering, which is also available at a fairly decent discount. So this is a season of discounts, and this is exactly when you build a portfolio. Remember one thing, unlike last year, Sonia, some of these auto ancillary which happen to be in the mid-cap, small-cap category may not see that kind of institutional interest because most of them happen to be below the 250th list. And mutual funds have such a huge choice when they have to allocate money from the small-cap, micro-cap funds that it may not necessarily be the same companies they would buy. So, that's one of the reasons why auto ancillaries always get sidelined in spite of good fundamentals. Because the momentum tends to weaken when you have a shift in preferences for mid caps and small caps. Because none of them are large caps except for a Bharat Forge or a Motherson Sumi, which I don't consider as ancillaries themselves because they are giants by them, in their own right. So the ones that we keep on discussing, I think they've done very well, but financials are good, fundamentals are, valuations are not at a stretch. But institutional interest will keep the price action on a little bit of a restricted.
Prakash, good morning. I wanted your thoughts on IT now, how to play some of the large stocks. Do you think it's now time to get into Infosys? By the way, Infosys saw some 900,000 crores of delivery buying on Friday.
No, I think absolutely. I mean, I've been talking about Infosys on a turnaround of sorts since almost 2 months now. Though, I was also not very, convinced about it at that point in time. But now the headwinds clearly tell you that if the US is going to be growing so well, and especially the larger corporations are reporting numbers which seem to be part of a much larger trend, why would you want to look at companies like Infosys, TCS, HCL not doing the numbers that they keep on talking about or probably exceeding that? So Infosys probably out of the biggies, Anuj has one of the most moderate guidances that we've ever seen in its historic trend in the last 3-4 years. So I mean this is the stuff that you expect a Wipro to be doing, not Infosys, but it's been behaving like a Wipro. But the price action could be like TCS, So that's where you are on a sweet spot. The expectations are low. The delivery could probably surprise you on the pleasant side.
Prakash, would you buy airlines now? I mean, Jet Airways has become a complete gone story. Almost 52-week lows. We've seen what happened to Interglobe after the numbers. SpiceJet, relatively, people seem to like it more. But the question is, with this decline in oil prices, would you buy it? And if you would, is it just a trade? Or can it actually become, a good entry point even for investors?
I think I would buy it for both. There will be different stocks for trading and for the long-term risking. So the trading bet seems to be more imminent in Indigo because things, incidentally, they're very quietly without much of a fuss, they've gone ahead with this, hike in their fees. I mean, in their fares.
Oh yeah.
And then you can make out, everywhere the fares have gone up.
Surcharge. I wonder if they're going to take that away.
Yeah, I mean, the fuel surcharge was, loaded up, and I don't see any semblance of that. And then actually, it's difficult for them to remove it in one day, add it another. It's not like your petrol retail outlet prices that nobody knows what it was yesterday. So you pay whatever is there. There's no choice. But in terms of the tactical up move that Indigo could see is significant. Whereas Jet remains a structural story in the making. It has so many issues that, even if it sorts out half of them, you'll probably see a little bit of a move back. I know I sound very optimistic given the fact that Jet is halved from its recent highs. But you never know, things could turn around, and when it happens, it could take 2 quarters. But I think on a longer term basis, I would still want to buy Jet or average out or something.
Okay, all right. Thanks, Prakash, for joining us and talking about all of those stocks. Let's take a short break on that note. When we come back, we will